Welcome to readtheticker.com. Today we're going to have an advanced discussion about the RTTTrendPowerOBV. It's a main indicator of readtheticker.com. I want to just go through a bit more detail. Here's the references of his presentation, so for members, you can research it and find out what's been used. There are two previous videos which cover the introduction and basic education of RTT Trend Power. Please take time to review those before getting into the heavy stuff. The why. Richard Wyckoff said to his students, follow the waves of price and volume. Our response to this need is the RTT Trend Power OBV. Let's start with the conclusion. RTT Trend Power OBV is simply a very good money flow indicator. It shows selling weak or strong. It shows buying weak or strong. But what it cannot do, and no indicator can, is show that the buyers or sellers are the strong hands or weak hands. Your Wyckoff logic rules are required to determine that. But your Wyckoff logic rules also require the determination of strong selling, strong buying, weak buying. RTT Trend Power OBV assists in your Wyckoff logic rule application. Here's your standard price chart with volume and a moving average. Now, when the volume is below the band moving average, that is considered low volume. If the volume is within or near the red band, that is considered average volume. If the volume is over the red band, that is considered above average volume. Where the volume is dramatically over the red band, that is considered extreme volume. Here are the basic logic rules for Wyckoff logic. This is very simple, but I just want to make a quick summary of what's required or what understanding is. You have to do your own research with the Wyckoff books I've mentioned on the site. Okay, first of all, let's just cover the price higher. If price is higher and you have below average volume, buying is going on by the minority. There's no real demand. The lower the volume, the weaker the demand. Simply, this is basically a 1 unit of price to very few units of volume, so 1 to 0. So you got price going up a bit, whatever happens, but the volume is not really an equal situation. It's lower. Here we have prices higher. We have average volume. Majority are buying, expecting higher prices in the future. Solid demand. Price up on full unit of price up on a full unit equal to a full unit of volume. This is a one-to-one relation. This means prices going up with volume going up. That's a good relationship. Price higher, just a little bit above average volume. It's pretty much the same as the average volume. Is that solid buying, but you really want the next few bars to confirm that the trend is up, so there was no real pressure or any selling pressure going on. Once again, this is a 1 unit of price movement to 1 full unit of volume movement. Once again, it's a one-to-one relationship. So you've got a nice equal movement of price and volume. Price is higher, but volume is extreme. Buying and selling is going on. Extreme volume suggests strong buying is met by strong selling. The lower the close, the more advanced the selling. In this situation, we have 1 unit of price going up, but we have many units of volume. And what this simply means is that not all buying is going on, and people are just taking advantage to sell into the buying. So depending on how strong it is, probably be where the close ended up. It's going to be quite bearish. When price is lower, this is just the inverse of the higher. What you have to understand is that when prices are to rise, the institutions and money managers and the large accounts want price to go up on average volume, a carefully managed, constructive price move. If price is extreme, there's something else going on. It's normally a spike up that attracts selling. And every now and then you get a massive spike up from lows, which can be the start of a very strong move. That is confirmed by the bars that follow. When the volume is low, it doesn't really support the idea that there is strong demand. Now, the next few bars may change the story. We have to wait and see. But there's one aspect on the volume and price action that really can't be catered for, and that's what I call the hit. Prices moving along in a logic sequence. You get higher volume, higher prices, and all of a sudden something actually changed. Well, the hit is basically a news story, an event that changes something. That's the story of simple basic story of Wyckoff logic. High volume, low volume, average volume, and prices moving, and whether it's buying or selling going on. Now, whether it's falling into strong or weak hands, you have to look into other aspects like ease of movement, whether there's a change in behavior. You might have had strong selling, and you get strong buying, match it up to push it back up. How well is price actually going down? That's relative strength to previous lows and highs. You want to get the feel that only the strong hands can manipulate the market to take a certain shape. Okay, let's take a closer look. Here we have McDonald's with the RTTTrendPowerOBV. To summarize some of the basics, the RTTTrendPowerOBV is a price and volume oscillator. The bull and bearish calls can be made around the -15, the 0, and the +15. Nothing has changed there. So if you're bullish, you want to sort of look for a buy around the -15 to the 0. If you're extremely bullish, you have to watch the +15. If you're bearish, you want to see a failure at the +15 or a failure at the 0. Extremely bearish, see a failure at the -15. So those sort of standard understandings about the RTTTrendPowerOBV are still in place. I want to take you into a more detailed, advanced look at this indicator. Okay, so here we have the SPY with a close-up look of the SPY, 100 bars. We have the standard volume with an average. The prices with high and low red bars. So if it closes high, it's blue. If it closes low, it's red. We have this indicator that I've purpose built for the RTTTrendPowerOBV understanding. It's the RTTTrendPower base. This is what the volume looks like that goes into the indicator. So you see standard volume up here, but the volume is converted into this format here for the RTTTrendPowerOBV. Now it's important to understand it's not the only ingredient into the RTTTrendPowerOBV. There is other ingredients, so it's not a perfect one-to-one movement measurement tool for the RTTTrendPowerOBV, but it is a pretty major one. So for example, here we've got lots of blue bars starting to rise here, the odd red one, and we see the RTTTrendPowerOBV start to rise. And then the blue bars sort of putter out, and RTTTrendPower doesn't go anywhere. Here we get price up here, and as you can sort of basically call out that area here, there's pretty much no demand bars, or price is higher but the volume is low, so there's no real demand. As you can see down there, the RTTTrendPower show that the selling is weak and buying is weak. There's nothing really going on. Selling does pick up down here with a spurt of buying, and the selling comes in again. Obviously we get the Ben, I think it's Ben Bernanke's little farewell FOMC, and we get strong buying pushing it back up there. So this is just an in-depth look of what moves the indicator up and down. So you see volume can be high or low. It doesn't really matter. It really depends on how the trend power base volume is working within the indicator. The other advanced thing to consider when you're looking at the RTTTrendPower is that we know it's a price and volume indicator, but it means nothing unless you compare it to something. Here we have Apple. In the past, I have been using RTT trend status comparison to RTTTrendPowerOBV. Now the RTT trend status is a indicator that is a pure price oscillator, or the OBV is actually a price volume oscillator. Now the price oscillator is designed really to tell you how far away price is from sort of the mean, so you get the idea of the standard deviation and as far, if it changes colour to blue, changes colour to purple, or within a close standard deviation it goes to grey. So really it's just a trend status. I found this to be, because it's a sort of like a slow moving tool, I found this to be good, but not as good as it can be. I used to go along here and I used to think, look at the price and volume. For example, the RTT trend bar here is near zero, but the price isn't. So that would be some heavy selling. And it was brought up by heavy buying, directly opposite. Maybe it might have been a bit of a news event. Here I see this is pretty much a one-to-one move. Price and volume. Here's a price oscillator. Here's the price volume oscillator moved up. It's pretty weak. It's pretty much a one-to-one. Remember I talked about one to many, one to few. Here we have one-to-one is like an average buying, and then we get one to many, which is like price movement on a 1 unit to a large volume. For example, here we have pretty weak. We had a rally, but it was pretty weak because got up to the zero line here, but this indicator suggested did it, so there's no real volume charge up here. Things beginning to change around here, of course. Still, we had a bit of a deep sell-off here. Bit of volume selling in that, but you have to say a bit of buying, strong buying, it brought it right back up. Here's the price oscillator didn't go so deep, but this one did. But the Apple fans brought it all the way back up. But it is noticeable that because the RTT trend bar didn't really smash above the 15 plus 15 line, and you can see the price one did. Yeah, it's going up, but it's not. The love isn't really there, but it is going up. The volume isn't crazy, so you have to say the ease of movement's quite easy because it doesn't take much volume to get it up. So what I've found after a bit more research is to replace the RTT trend status with a tool which is a bit more sensitive. Okay. Here we have IBM with 100 EMA moving average and the percentage price oscillator 100, 1, 1. So I'll just scroll down here to show the indicator settings. Percentage price oscillator 100, 1, 1. What that basically means is it simply is because I've eliminated the signal and the divergence part of the indicator, it's simply price moving around the 100 EMA shown in a horizontal format. Now, for some unknown reason, the 100 EMA is a good reconciliation to the RTT trend power. So when price is near or on the 100 EMA, that sort of is a mirror of the zero line on the RTT trend power. And you might think, oh, you've got 100 EMA in your trend power. I can put my hand on my heart and say there's no 100 EMA in the trend power indicator. Maybe all the calculations work out that it seems to be that way, but it doesn't work out that way. So what you do now is you have a pure price oscillator, which is actually very sensitive, and you have the 100 EMA up here if you want to have price on a chart. For example, these are very weak rallies. Price goes up pretty close to the 100 EMA. The volume size, you can see it's quite a wide distance from the zero line, so I would call all these movements weak. Obviously, if they're weak, you look to sell them. Here we had a bit more strength. It still turned around and failed. Getting a bit of divergence. So yeah, if you're looking for a buy, you would have been hunting around here. Well, if you're really ambitious, you might have gone a bit earlier. Now, obviously, we had a situation here where price actually went up a little bit past the 100 EMA, but as you can see, there wasn't really strong buying at that level. As you know, with price can actually move quite a way distance on very low volume. This is a price-volume relationship study we're doing. It's not perfect. Not every chart is a yckoff chart. So you have to sort of judge a chart and price action to see whether it's obeying the yckoff rules. And here, as you can see here, we had a pretty solid sell down on pretty good volume. Sort of just minus 115, but the price action, as you can see here, was pretty mild. So there was heavy selling down there, maybe prior event, but as you can obviously see, was responded by pretty strong buying up to a certain point before it petered out. And obviously from here onwards, that was pretty weak action. Strong price action, but very weak volume action. I guess there was an earnings event here. Actually, I'm pretty sure there was an earnings event there. And price was just mucking around on its own and low volume. And but the institutions weren't there. And it came back. Looking for buy zones around here. Price came back. Here, for example, if we get down to the micro level, we have a pretty strong sell down on price action wise, but the volume didn't really come into it, so that's a weak sell down. So that was a good sign that there was no real selling going on here, because the trend power didn't really show any move. Now, if you use the RTT trend power base, you probably would have seen that the very, very low volume on the red bars there. Here we had a strong sell down, obviously by the smash, the gap, and pretty much a strong buy up, and maybe it was a scare of another news event. But as you can see, when it got to a certain height, no one really wanted to follow it through. We'll go through a few more examples. Now here we have Ford, which has been a pretty friendly chart to myself. It's a pretty good yckoff chart. I wanted to show you how it sort of started off, how it got going, and how it sort of ended at the end here. Here we had 100 EMA, and as you can see, it sort of fully recovered up here. Good sort of charge up here, with the price held between here. Bit of a hard sell down relative to where the price action was. Bit of volume selling here, but my yckoff rule would tell me, okay, we had hard selling, but price didn't really go anywhere. So that is the strong hands buying it up. We had a very solid, strong move up here, strong buying between here and there. Buyers are present. Then the sort of low buying just tapered off, and then once we had sort of pretty much low volume, but the price crept up. I think we must have a news. If I remember, we had a news event. It just took the rally off. Whoops. That's where everything just took off. And then we had some selling taking it as people took advantage of the higher prices. This statement here, which showed price all fell all the way back to the EMA, but the trend power volume oscillator did not. That showed the selling was there, but really it wasn't that strong. Price fell further than the volume allowed it. So here I would say that price unit was 1, but the volume was, the units were a lot lower, so it's light selling. And as you can see, all the dips here are pretty much low volume sell-offs. That was a very friendly yckoff analysis there. We had good volume on the upswing and low volume on the downswings. Here we had sideways action. And as you can see here, the red bars started smashing down, started dragging the price volume oscillator down. The people were just distributing there. Here you would have to sort of say the price fell back on a 1 unit of selling to 1 unit of volume. So it's pretty equal there. The news carried on and people had another go getting it up. As you can sort of notice between here and there that the volume on the upswing got less and less. It wasn't exactly the same as it took off from back here. The original start from back here. In this particular case, you might say that here we have a low price upswing and a much higher volume upswing. So here we have 1 unit of price to many units of volume. It suggests, well, the volume's a lot stronger, but it's not really going anywhere, new highs. So people are taking advantage of selling that and it goes up. If you get a rising volume and price isn't going somewhere, and it's on the upside, so you think it's buying, strong buying, but it's not really going anywhere, so there must be some selling coming in. Here we have some sideways action on the 100 EMA, where the RTT trend bar just keeps on falling, so it holds up and just slowly ebbs away. We'll take a closer look at that. I cut down to 75 bars. Here's our close-up. Trend power falling away. Price action sort of holding above the EMA quite solidly. Lots of red bars with lower closes. You'll see down here in my RTT trend power base. Before the big drop, you'll see that there's lots of red bars relative to the blue ones. There's just a lot of selling going on. As you can see here that the blue bars are lower than the red ones, so the force of selling is much greater than the force of buying on that sideways consolidation. Things accelerated. Here was a news event. You could have been a bit bullish here, but if you had known about a possible important date in the company calendar, for example, here was a bad guidance. We had a big volume sell down day. At the moment, I would say that price is holding up. It's going sideways. See how you have a big volume sell day. We're going to have a big volume event here. Selling has, here we had another large sell down day. Price didn't really make new lows, so it's been absorbed. So long if you have a high selling volume bar, the price isn't going anywhere, someone's buying it, it's been absorbed. So if the price holds up here, you won't even get a spring here, you probably see it might bounce back. Swing past the -15. So you have to take into account the volume. Here, the RTT trend power shows strong buying, weak buying, strong selling, weak selling, and you have to throw in your sort of yckoff logic brain to sort of work out, is price going somewhere on this, is price not going on something? If it's not moving on the weak or strong buying or selling, what else is going on? So instead of looking at a single bar every time to see what's going on, here you get a chance to look at the volume wave. So is this wave strong, is this wave weak? Then work out what's going on after that. That's an advanced look at RTT Trend Power OBV. Take more time to study it and more charts. I believe it's a valuable yckoff indicator. Thanks for watching.